Alrighty, good evening, everyone. Welcome to the Trade Findings and Adjustments hosted by Hurley Investments. My name is Kevin Hurley, and I'm going to spend a quick half hour with you tonight. And I'm trying to do these to not only show you some trades that are profitable, but ways to beat the market. And with that said, as I looked overall today for my education group, not bad, pretty nice to be able to beat the market pretty handily today. And of course, it was Facebook and Visa, which were my winners. But it's very disappointing for me to see our stock market be up so much in the beginning and end up down 0.83% on the S&P 500. That is a disappointment because it was up about 0.25%. Round trip, it was about, I think it was 1.31% for the day, but it makes me worry. So I'm going to probably grab this a little bit differently. So let me get this out of the way. So when you look at a market that can't hold its gains, what do you do? What do you do when you look at a market that can't seem to hold its gains? Remember last night I spoke about having a reason, finding a reason other than just money to make everything work. But what do you do in a stock market like today where it's not going to hold on to its gains? Rich, protect. I like that one. And I agree with that. Let's move that over to those spread trading, because we're kind of working on spread trading. Outer head, so the great idea, roll out or hedge, which I could put adjust, right? According to, and you're going to say according to expectation with an extra for black swan situations. So Abraham, I'm going to be 100% honest with you. I never trade for a black swan event. A black swan occurs, I think it's, 0.21% or 0.12%. So it's like less than a tenth of, or a little bit more than a tenth of a percent. So I'm not going to fix my trading for what can occur, a tenth of a percent of the time. I'd rather do my trading for the other 99.9% of the time. But you can obviously throw some extra protection if you go into a black swan event. But please don't trade for a black swan event. Those probabilities just aren't in your what am I trying to say? The probabilities just aren't in your best interest to be profitable. But definitely you protect, you roll out or hedge according to the, I'm going to go ahead and tell you technical, fundamental, or sentimental indicators. Now, if you were to ask me about trading on these, technicals should always be more of a swing trading, 3 to 10 trading days, right? Fundamentals are long term. That could be a 3 to 6 to year long thought process on your trade. And sentimental are unpredictable. Sentimental indicators are sometimes a great stock like Apple that gets beat up for no reason and stays beat up for years. Sentimental is headline risk. Sentimental is usually shorter term and extremely hard to trade off of. But going back to what Abraham said, something you need to pay attention to for protection. So if I was looking at trades, if I was looking at trades, I would choose longer term if I was bullish and 30 days or less if I was bearish. Meaning, if I'm looking at a bullish position, I want to give myself till probably November, December. I would go out being here the end of May, June, July, August, September, October, November, December. I'd go out 6 to 7 months at least for a bullish trade. If I was going to be bearish or looking for something with time decay, a credit spread, I would be 30 days or less. In fact, in all honesty, I'd probably look for something 2 weeks or less. And I'm going to see what's held up in our stock market. That is the reason why, as I pulled this up, as I was looking at things today, I would tell you Visa, Facebook held up pretty well. Google's flat and video is flat. You could trade all of those. Boeing wasn't bad today at all, $112.50. So I'd kind of put Boeing on a list. I'd look at FCX on a list, knowing that's going to get a bump from some China news. The rest I'd have to probably spend more time looking at a chart. But based on what I know and what I trade, let's see how my little... Well, I probably did pretty good today. I probably did good because I'm so over leveraged in Facebook. Not bad being up $517 on a 0.8% down day. But again, it's all Facebook and Visa, Boeing a little profit, Under Armour, Ford, Baidu, Disney. What killed me is Bank of America. Not a bad position to be in. Bank of America is a July bull call. I'm probably going to have to find a way to get some more time in this trade to make it work. If I could get some more time in this trade, I would also probably want to get down to a 380. Bank of America out to January, added some extra positions in there. Totally okay with this one. It's an August move. Baidu. I already took the short calls off. We just have a September 180. Right now I'm okay with that, but I would feel more comfortable if that was out to November as well. BNet shares, that's my little flyer. Disney, I like where Disney's at. January, way out there in time. Not a worry. Ford, half my positions are off. I still have 10 contracts available. Gonna sit back and hold on to Ford. Facebook out to June 2020. Very comfortable where this is at. But again, next time I get up to $200 on this one, I should take a couple off. I'm so over leveraged in such a small portfolio. It's really a pretty ignorant position to be in. To have, well, it's 25,000. I've taken out a bunch of money though. Probably taken out 25, so I've taken out about 12,000 out of this already. getting closer to the 27,500 that I started with. Being in Facebook to the tune of 7,000, but that's my market value. What is my cost basis? Cost basis 17. So let's do a little bit of explanation here. 17,284 times 500. 8,642 is my overall cost basis, which is a third of my portfolio. Talk about being way over leveraged. This is one of them. Should have lightened up when I told you I should have. Visa, leap long calls, January 21, I'm fine. So as I look at my portfolio, Baidu September calls and my Boeing, I need to start looking at. And right now already on Boeing, cost basis 376. I'm down 700. So I'm down about a third of my cost into it. My question is, all right, so if I need to buy myself some more time, I would be adjusting and rolling in and out, which means I want to sell something like probably do want to go out to November. Let's set up my trade like I had my first one. 390, 400. Only going to do 3 contracts. Of course it's not showing me. God, I hate it when it does that. So out of curiosity, let's find out. Let's backtrack. Problem with everything is Boeing July 390, 400. Last trade at 335. 400 traded at 196. So 335 minus 196 is $1.39. $3.35, $1.96. Let's see what my original positions were. One I would look at would be obviously to roll this one out. For whatever reason, it's not letting me go the way that I would want to. I would definitely go out to a November. And if there was any way possible, I might change to 385, 400. And see about trying to make a little extra money. $4.55. No, I might still keep my 390s. I would. I'd keep my 390s. Knowing $1.40 of them would be paid for by my previous trade. So that's an interesting one. It was brought to my attention, FCX. And someone once made the comment, well, you said you're going to place a trade and you didn't place a trade. And I said, yes. If I said I was going to place a trade and I didn't place a trade, could someone tell me what probably happened? What probably happened if I said I was going to place a trade and I didn't place a trade? Changed expectations, conditions changed. I could even tell you common sense said, if I'm not going to get my price or I'm not going to get my credit, I am going to most likely not put that trade on. I like FCX, even though it spent 2 days a little bit lower in the last 6 months. I still see a $10 up to a $2.25 upside potential. It's obviously being pulled down by the economy. It's obviously being pulled down by a China-US trade confrontation. It's copper, it's ore, it's some gold. As I take a look, last time it was down here, it's a jagged line, but it went up to 12.5. I don't think it'll get up to 12.5, but I do think it has an opportunity to get to 12. That's a 20% return on a $10.03 stock. It's a relatively cheap stock. Not saying you want to throw your money away. Not saying that cheap stocks are the best stocks, because that's not what I'm inferring here. But it does pay you a whopping 2% dividend yield. Next earnings are on July. It just seems like it has an opportunity. But it's a waiting game. It is a waiting game. It's the same opportunity I see in Ford. But Ford will pay you a 6.10% dividend right now. Multiple at 8. Boy, that's just so ridiculously low. Ridiculously low. Take a quick look and see if there's something I'm missing. I placed the trade and I've had 200 shares selling puts. So someone is on it and they're selling some puts for 200 extra shares. That's not a bad idea, especially at $10. To sell some $10 puts right now, boy, that looks pretty good. PE 8.0, Ford PE is a 10. Ford PE is a 10. Ford PE sitting there at a 10. With earnings per share at 1.24. $10.73 times 1.24. Fair market value of $13.30. Just taking the forward PE where it should trade against its earnings. 1.24, $13.30. Debt to asset ratio at a 1. Every penny they earn, they pay out for their debt. Past 5 years, it's been negative. Next 5 years looks positive. Earnings per share next year could be up 132%. Institutionally owned, 73.9%. Return on investment, return on equity. Man, these guys look really good. I like that idea, though. Rich just came up with a good idea. If I was truly looking at an interesting trade, it's going to have to be cash covered. July is its next earnings. $0.62. 62 cents, giving you a break even at $9.38. 50-50, 620. Maximum loss if they went under is 9,000, but your break even $9.38 on a cash covered put. Wow. Stock range has been down to 831. So wow, it's just what a good opportunity. Probability for any profit is 65.44. Let's go back one more time and let's just look at a chart. Really the last 6 months is all I care about. $97, $9.79 was its last closing low, and it touched 960.79. So great trade. In all honesty, $620 sitting in it till before its earnings. Let's take a quick look. Does it have run up before earnings usually? Does this sucker have a run up before earnings? Earnings. Week and a half run up. Week and a half run up. So yeah, it has some run up before earnings. Good opportunity. I like it. That is one that if I took a quick look, July $10 strike short puts, that's a great opportunity. That really is a great opportunity. Interesting, very interesting. So, looking at 2 trades, placing a new one if you haven't done it on Boeing out to November, and some naked short puts. Pretty interesting. I like it. I like it. I would wait to see how this one opens up tomorrow. But a $10 short put, it really strikes some interest in me. And again, you don't have to stay for the whole thing. We start to get a little bounce tomorrow, put it on, gets up to 1050, you can take half your credit, take it off. You're in good shape. Not a bad idea. Great trade. So, guys, appreciate you being here with me today. A lot of you have talked about doing the same trade, and I do. I trade what works over and over again. I will put this new information in here and try to get this out. Most likely, I'll find some time to do it tonight so I can get out, or it'll be out first thing tomorrow morning. Guys, I appreciate you being here with me. Any questions? Any questions that I can answer for you or that you'd like to ask? All right, I got a couple thanks, a couple good nights. Let me just wait 10 more seconds to see if something comes in. Rich, great idea for something to put into. Tom, nice to see you. I haven't seen you for a while. Haven't mentioned Tom's name in a while. Tom, glad you're back. Hopefully I'll see you here a little more often. All right, guys. Hey, have a great evening. Appreciate your time tonight. Look forward to seeing you Thursday morning. Bye-bye.